Welcome to Caching Waves. This is an Elliott Wave update for MATIC. Now I'm out on a daily. Just wanted to give you a quick refresher in the fact that I'm looking for this to turn into a 5-wave impulse to the upside, targeting the 1.618 for the third wave at around 250. Get a correction back around 150, and our fifth wave should target between 340 and 411 between these C wave targets here. The 1-to-1, 244, and 450. Won't know until these waves start mapping out. We have price action to track, and we can actually use our indicators as well. But there is a clear invalidation area, which we are at right now, and getting a little bit concerned about this. I'll show you on the micro what I'm talking about, but I think there's a 50-50 shot here that we make this move to the downside, and what we're creating is a larger running flat where we get the C wave down before we actually take off in that bull run. You can see we're right in our B zone right here between the 1.236 and the 382 of this A wave down in gray, and targeting a equal wave in length and price and time to complete this correction. Now, earliest areas I would consider that complete is literally just at the previous high here at 104.17. That's on linear scale, the 618 extension of that A wave off the current B wave high. So that would be the least amount I would consider the C wave correct. And it can come as deep as the 1-to-1 on log at 81 cents. So about a 25-cent range there. I'm going to go down to this area and show you why I'm concerned about that. Let's go down to the 1 hour. If you've been watching since the beginning, you know this has been a pretty tough wave count. I've been using fib extensions just to get the best fit. Best fit as an impulse is up here for our fifth wave of wave 1. Then we have a expanded flat for our wave 2, so 1 and 2. And the issue is now, look at this garbage we're getting to the right after that. So it's either a really ugly impulse or a diagonal. I'll show you that. Or this has completed some sort of complex correction, and we're getting that move to the downside. I would actually prefer this move to the downside, to be honest with you, just to clear things up and we can start moving impulsively. The only way I have this ideally is an impulse and a diagonal, in which case we should take off very, very soon. Now I am still long. I have a bag of this as well from way down here, so I'm just raising my stops. But invalidation of the impulse is obviously at this last pivot at 92.84. And again, the closest we'd consider this complete is up at 104. So this could just be a C wave to here, and then we start our impulse from this area. So very complex structures happening. But we'll go down to this last wave, and I'll show you how it can be impulsive, but it's very, very ugly. And you can see we're right at that zone we've been looking for this potential C wave to the downside. So we'll see what we get. I'm personally going to move my stops just past the 618 of this move to the upside, and look for re-entries if we get that C wave down. So we'll zoom into this area, assume this is a wave 2 complete. It's the biggest structure, longest correction I've seen, hasn't even reached ideal areas. But just want to show you again, just out on the daily, you know, we look for the 618 and the 1-to-1 and for a guideline in time for these 5 waves as a diagonal to the upside. And this was the 618, so we'd have to say it ended early for this to be the beginning of the impulse. And the 1-to-1 is right there, Thursday, April 11th, would be ideal for that C wave. And then we actually start our third wave impulse. But I don't want you to think I'm like bearish here. I'm just showing you my concerns. I'm still long in this, and I will be stopped out before I bail. But I just wanted to show you, when you get a lot of overlap and very, very, very difficult counts, it's best as your own guidelines just to consider them that we could be in a B wave. At least in my experience, that's what I've found. If it's insanely difficult over and over again. So how this can be diagonal would be something like this, a double zigzag here for our wave 1, wave 2. This would have to be an A, B, C, 5 waves in there, get our 4-wave correction, and this would be a W, X, Y. We basically double topped. That's the only way the shape looks correct to me, and we just double topped here for our 5th, which I don't like in diagonals. I like to see the thrust at the trend line. And then I would have this as a W, X, Y as our correction, as a running flat, shy retracements. The other alternative I saw, but it's very ugly, is this is a wave 1, 2, 1, 2, 3, 4, 5, but it's the same correction, right? And I was looking at this, that's our wave 1 and 4 here. And if you zoom in, between our wave 1 and 4, right here, we don't overlap, so it is valid. It's just a very ugly impulse. So both counts are valid in my point of view. And if that's the case, we'd see where our trend lines hit. Wave 1 to 4 for our 5th off the top of wave 1. You can see it does work. It does fit those guidelines where that's a 1, 2. It's just ugly though, right? 3, 4, 5. It is not pretty whatsoever. So I think I would like the diagonal in that scenario where this is our wave 5 high. It's just double topped. And then we have most likely a flat here. But in that scenario, if you take that trade setup where this is our 1 and 2, this should hold as a running flat unless we got an expanded flat. So the trade setup is there, although I would say kind of risky based on how ugly these counts are at. You can put the stop at that low and targeting those way up targets on the larger time frame. Be a pretty nice trade setup if it worked out. Let me see where that would take us. Might be tempted just to take a shot here. Can't see it. There we go. So that would take us up to that 1.618. 16 to 1. It's a pretty good risk reward. I don't know if you're right, how often you're right in this scenario though, with such ugly wave counts. But if I weren't in this already, that's one trade setup I would take, because there is the possibility that this is a running flat. So stop can defend that A wave. And then my last and final trade setup would be something like this, from this low to this high, because we'd have a running flat there or an expanded flat. Put on my retrace, and my stop would go just past the 618 at about 103. I'd go a little bit behind it. Obviously, invalidation of this as a wave 1 and 2 is at 92.84. But yeah, I'm going to raise my stops to that area anyway, about 102, 103, just past the 618, because I want to see this really get moving to consider this valid anymore, at least the way it's currently counted. And that is in the bullish scenario, a 1, 2, 1, 2. So you can see we should really launch from here. The only way we'd get delayed is if this is an expanded flat. And again, we'd expect to launch right after that. So those are the two counts I'm looking at, looking for either the C wave down without making a new high, just straight down from here. or we explode to the upside. I know it's frustrating when we're in those zones, but that's what you got to do. There's trade setups there, not financial advice, just what I would do. But there are trade setups here. And I know if we fail, this is my next buy zone. They would most likely come back above these trend lines. You see I have mapped out here, find consolidation there, and then move and actually start our third wave. All right, guys, that's it for MATIC. Thanks for watching. I'll see you on the next one.